Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Hope you guys had a good week last week. While I was gone, it was good to be back. Thank you very much for your many nice, welcoming comments on Twitter and StockTwits and YouTube. And thank you for kind words. And so, I mean, hopefully, I think, I was gone all week. Last week, I did the special video over the weekend, last weekend, not past weekend, but the weekend before the election week. I think all the things I talked about on that video, I think a lot of it kind of, because we talked about how you want, if you're a long-term investor, if you're a longer-term trader, because market was at 320 before I left. And we're currently, we got up as high as 365 today. We're currently sitting at 354, and we talked about that you want to stay long-term bullish. And I think with the election week last week, we did see market climbing higher. And we're gonna go through all of that, review everything, see what we can expect going to potentially remainder of this week and possibly tomorrow here. So. It's good to be coming to you guys, and again, we'll look at the market every single day this week and see how the market, is playing out and what we can expect going forward, right? So, all right, let's look at the short term. Obviously, S&P is up about 1%. It was up as high as 2.5%. You can see some of these leading stocks been getting hit here. Netflix down 9%, Amazon down 5%, Facebook down 5%. I believe Nvidia is down also. Also, I believe Zoom is down quite a bit. Roku is down. So a lot of these leaders that got hit today, and a lot of the laggers, right? We saw banks going 10, 20%. American Express is 23% up today. We saw like Bank America, JP Morgan, Goldman Sachs, 10%, 20%. We saw like restaurant stocks are up quite a bit, like Darn Restaurants, Denny's, Cheesecake Factory up 10, 20, 30%. Some crazy market moves today. Banks as a financial sector as a whole is up 10%. It was up as much as 10% today. Closed the day with the 8%. Dow, Russell is up about 3% or so. So, again, that's what we're seeing. Some of these high flyers like Qualcomm's been flying. It's down today. Alibaba's flying. It's down today. You can see the banks are coming up here. Goldman Sachs is up 7%. JP Morgan up 13.5%. Today, Morgan Stanley is up, I think, about 8% there. Bank America is up about 14%. So bank stocks, I also saw like cruise line stocks, like RCL, CCL, because I hold RCL in my portfolio. This is up like 20, 30%. Some of the airline stocks are up quite a bit. Boeing and Delta Airlines and things like that. So again, laggers are making a move, and it's good to see the banks making a move because they've been heavily hammered. And it's always, when you see the overall market, recovering, you always want to see the banks to kind of catch up with some strength. And that's kind of it's always been that classic way of looking at the tone of this market. And it happened in 2016 also. When you look at 2016, you saw that here. I'll show it to you real quick what I mean by that. Let's go to XLF here real quick. If I go to 2016, let me get rid of things first. So you can see in 2016 here, this is 2015, this is 2016. Banks been actually lagging quite a bit, making lower highs, not making a move. But I don't know where you see the banks. I remember I was trading and I was long, and I remember banks and transport just out of nowhere just skyrocketing. I remember it went on for weeks, and I'm not saying like we're gonna have the exact same thing, but it's always a good sign when you see the banks and the because I think at the time back in 2016. Banks and the transport, they're lagging. And I remember a lot of people are talking about Dow theory, how the Dow Jones Industrial Average must be confirmed with the Dow Jones Transportation Average. It wasn't confirming, but I remember when the banks and the transport, they were extremely laggers at the time back in 2016, late 2016, near the election, and then they just started skyrocketing. They wouldn't stop for weeks. And so you see that strong bullish move in the banks. We are seeing something similar here. You can see banks been lagging for quite some time. This is an important pivot right here. And what we're seeing is a big, strong bullish move today. And a lot of the bank stocks are up. You can see on the year-to-date numbers, banks are down still almost 20%, while the S&P is up, 8-9%. NASDAQ, obviously NASDAQ and semis, they've been the leader, and they're all down today. And you can see Dow's up 3%, but again, they're breaking even on year-to-date. Transport's up 2%. Russell is almost up 4%. But the heaviest, obviously, the banks, and they're making a big move here. You can see some of the airline stocks coming up here. Boeing 13, Southwest Airlines 10% there. Delta Airlines up almost 20%. Best Buy's been leading. Best Buy's been making a big move. You can see it's down 10%. SkyWest here about 17%. Actually, let's go back here. So let's go back to the spider. So we'll start with the short term, and we'll zoom out as we normally do. So you can see that we see a nice, really, really big gap up. And then that's the first hour. Second and third, fourth hour, we move sideways. That's a micro term pivot. We lost it on the last hour, and we did see a fade towards the last hour there. So let's get a better idea, though. You have to kind of zoom out and look at the midterm sense to get a better idea here. So I mean, it's crazy because the last time I was analyzing this market with you, it was here. It was right here. It was at 320, somewhere in this vicinity. I remember all my moving averages. All my moving averages were down, and prices are below all the moving averages. Crazy how quickly that sentiment changed in just about a week, and we're back above all the moving averages. We are cultivating higher high here, and I talked about this on my last video, right? You'll be surprised how quickly things will change. And what are the things that I've been talking about before I left? All that 2 weeks ago, that entire week, is that in the midterm, as long as this market does not cultivate lower low, right? We have to give benefit of the doubt to the buyers in the mid to long term. You guys remember that? And I was using back in June, right, as an example, that back in June, I mean, things were crazy in June because, man, in one day, this thing tanked like 8% or something like that. And remember, we talked about same thing here. As long as this market does not cultivate lower low, there's a good chance that this market continue to move higher because the long-term picture was bullish. And this was kind of a knowledge that I was using. This was an example that I was using. The June's price action. Well, we'll come back here today, right? And this was what we were analyzing back in early November, late the last week of October. That bulls, and we saw that bullish divergence here also. I'll come back to it, but let's analyze purely the price action. We talked about this low, right? And we want to stay above it. We want to make sure the bulls, right, protect this level. As long as we do that, we can look at this level as consolidation instead of a bearish downtrend. Because what is the definition of downtrend? It's lower highs and lower lows. We did establish the fact that we were in a downtrend in the short term, correct? Right? We got these lower highs and lower lows. But in the midterm, when I say midterm, I mean, we got this here, and it made a higher high, but it did not yet made lower low yet. But with this recent price action, you can see that we have now higher high and slightly higher low here, very, very slight. So now what are we going to try to figure out? What we're going to try to figure out is, where is that higher low, right? Where is that higher low, right? Is this higher low is gonna be, and that's what I'm gonna try to figure out in this video, right? The market already cleared this level and this level. We already cultivated higher high. Market pulled back, right? Market is pulling back, faded towards the last hour, and that's not the end of the world, because man, bulls opened up this gap. 1, 2, 3, 4, 5. This gap still open from this morning, and this is not a coincidence that when it did pull back, we pull back right down to this level, which is a prior resistance. And that's a strong resistance, because that's what we saw this thing coming from 354 all the way to 323, right? That's we're hanging around here, retesting that prior resistance as a potentially new support. So you can see that my short-term moving average is in that vicinity, but my mid-term is rising now. My long-term is starting to kind of slightly rising. So as of today, benefit of the Dow goes to the buyers in the short-term, mid-term, and long-term. All the terms, we want to give benefit of the Dow to the buyer. So problem is, at this point is, we have no problem. It's just we're trying to figure out where is going to be that higher low. Is it going to be here, which is the prior resistance and the support? So it'll be better for the buyers if they make sure at least some of this, because this was a big gap up. At one point this morning, this entire gap was open, but almost more than half was filled. Right, about 60%, 65% of that gap that was open this morning has been filled. However, we got about 35% gap still remaining open. It is better for this short-term momentum if the buyers can sustain and protect this gap for this to get back up and take out this high here. So if this thing comes down and fill that gap, that's going to act as support. So there's a lot of supports here. So as of now, we are sitting on the resistance level. If we hold this level, if this market starts to gap back up, that could act as good support. It would be better for the buyers to sustain this gap. If the gap gets filled, it's probably going to act as support. So I think if we don't find support here at 354, probably going to find support at 350. It's going to act as support somewhere in this vicinity. So either we bounce from here or we bounce from there. We want to continue to give benefit of the doubt to the buyers. And it's kind of difficult to chase it up here. You want to start buying at these lows, at the you know what I'm saying? Like you want to start getting in before market makes a move. It's always tough to chase after market has made a big move here. And same thing here, right? Same thing here, right? If you wait until everything looks bullish, and that was here, let's say, okay, that's a pivot, we clear above, and you start going long here, market went all the way back down, punishing those chasers. That's why you always want to take a risk at some of these level where there's a lot of fear in the market versus chasing later, FOMOing later. Let's check out that oscillator here. So oscillator, we actually do have bearish divergence in the short term. You can see that we got the higher high here, and then this thing actually coming down. So we don't want to give too much weight on this though. I don't want you to start looking at this and say, look at that thing. That thing looks ugly. Well, we saw something similar here. You see that? You see that we got the higher high and lower highs here? The reason being is that if we're in an overall downtrend, and we got the bearish divergence, that's a big deal. But when we're in an overall uptrend, it's not huge. That's the reason why we saw this bullish divergence, and that turned out to be the low before this thing went up to 365. Why? Because we're still in a long-term uptrend. So when you're dealing with a bullish market and you see a little bit of bullish, I mean, it's not little, but you see these kind of bullish signals appear, and it turns out to work out well. And so that the bears are going to start complaining. Why is that? When bears got some kind of a bearish divergence, it never plays out. But when the bulls got their bullish divergence, it plays out much, much better. It's because we are in the overall bull market. If this was to appear in a overall bear market, you will see these kind of bearish divergence playing out quickly, right? This kind of bearish divergence will tank the market. this is why your analysis has to be different in an overall bear market and overall bull market. We're in an overall bull market. So this kind of bearish divergence will give you a little bit of weakness, but buyers will kind of grind, move sideways, and kind of nullify that and bring it right back up. That's what they did here with that bearish divergence, which we talked about. And here we got a little bit of that, but we got so many supports here. So I wouldn't put too much weight on this. And we'll see how it plays out going into tomorrow. I'll tweet things out. So we got right now 354, 349 as a potential support. I'll put another one, I think 343 also. But I think this level is going to be a pretty strong support here, one of these levels. If not, we just find support in this vicinity. So going into tomorrow, despite the fact that we saw a little bit of fade and maybe a little bit of bearish divergence, overall, we want to give benefit of the doubt to the buyers. We got a lot of momentum here. Yeah, we are pulling back, with the overbought scenario, but after market is cultivated that higher high here today, that's a victory that buyers going to declare. And with a lot of these gaps that has opened, right? In the last week or so, they're all gonna provide solid support. So I don't think bulls can able to bring it all back down at this point. I think some of these levels, 354, 349, worst case scenario, maybe 343 will act as support. We're just trying to figure out which level. Probably gonna get better idea tomorrow. I'll tweet things out at 2K Kim on stock tweets and Twitter, but I'll come back for you guys tomorrow night and we'll re-examine the situation. We'll go from there. You guys enjoy your evening and good luck trading tomorrow.